not about, the dilemma behind that one. Our focus here is right now to understand this exchange rate system has evolved from the different standards, different exchange rate standards. So we just need to learn that. We don't need to learn the percentages, the historical stuff, okay? So just to understand the concept, that's it. So the history of exchange rate, the exchange rate has emerged, number one, from the era of gold standard, which lasts from 1876 to 1913. So in which each currency was convertible into gold at a specified rate. So which means every country must hold enough gold to back its currency. So it means gold is just stuck in the vault in a safekeeping, and that's it, because the receipts of all the receipts are all over the world. But when the World War I began in 1914, the gold standard was suspended. Then we came with the agreements of fixed exchange rate system. So we have one Bretton Woods agreement, which is for the period of 1944 to 1971. So it is fixed exchange rates system in which, for example, $1 is equal to 3 yuan. That's it. So whole year or 2 years or 3 years, we just fix the exchange rate. That's it. So in which, but that doesn't mean that it is fixed forever. Just 1% above or below, the fluctuation is just allowed, no more than that. If rate is above 1%, the market grows. That's it. No one is ready to exchange above 1% fluctuation in the market. That's it. But there comes from 1971 to 1973 Smithsonian Agreement, which just allow the 1% band just for 2.2%, 2.25%. So the currency can fluctuate from 1 to 2.25%. If more, then market is closed. So if you need to, acquire big currency and you are buying the currency, when you are buying, you are creating demand. So price goes up. So when price hit by 2.25%, market is closed. No one is buying or selling. So you need to wait for another day. Similarly, if you need to raise more loans like 1 billion, 2 billion, 3 billion, it takes months to collect, because every time this 2.25 band is hit on the upper bound, market is closed. Nobody is now trading at that rate. Okay. And then comes the floating exchange rate system, which means widely traded currencies, which means big currencies, are allowed to fluctuate according to the market forces. So the band is just eliminated. If currency goes, if $1 is equal to previously 3 yuan and now it is 5 yuan, 8 yuan, 10 yuan, whatsoever, it depends on market forces of supply and demand. That's it. We call this floating exchange rate system. So any question regarding these two? Oliver, Dion, Tiffany, TD?
No questions.
No.
Okay. We have one. Okay. Dion, I received your message. Okay, here. So foreign exchange transactions. Yeah. How foreign exchange transactions are occurred? Either over the counter or from exchange dealer. Over the counter means, over the counter is customized, less regulated platform. Previously it was a counter, like a table or something, you go there and just present your money, foreign currency, and receive your local currency. That's it. But that was customized. Everybody had its own rate. But nowadays it's a platform, the more IT services are coming, so they have developed the over-the-counter market like NASDAQ, right? So the over-the-counter market is the telecommunication networks where companies normally exchange one currency for another. So why to go to the exchange dealers? Why not? If the other company has dollars and my company has yuan, so why to pay the dealer's services? Why don't we transact the foreign exchange among one another? So the companies who require dollar, they will send the dollars, and then the companies who have excess yuan and $1, they receive the dollar and send the yuan. That's it. Then foreign exchange dealers, which are the agents or middlemen or intermediaries in foreign exchange market who buy and and hold different currencies. Upon request, they are ready to sell. Like a market in which seller has the inventory, their inventory is currencies. They have stock of dollars, pounds, yen, yuan, different kind of currencies, and they are ready to exchange it. So a foreign exchange transaction for immediate exchange is set to trade in the spot market. Act spot rate. Now, what does it mean by spot market and spot rate? So if you want to buy currency right now, what's the rate going on right now is called spot rate, and the market is called spot market. Simple. If you have the dollars, you present the dollars and receive yuan, that is spot rate from spot market. And if you want to buy the dollars in future, right, but that is not spot market. Spot rate or spot market is a rate and a market in which you conduct immediate transaction right now, right? Similarly with the interbank market, so trading between banks occurs at the interbank market. So now the span of banking now expand to different markets. So in order to facilitate their customers, so they are opening or they are maintaining inventories with different currencies as well. So now banks are also acting as dealers. So they have a separate market called interbank market. So they basically deal among themselves, banks to banks, right? Or a big transaction for individual. Otherwise, they don't deal with the single person or small amounts. That's it. But big transactions from interbank between banks, they deal with that one. So are we clear about the spot market and spot rate? Because that's the terminologies we will be using more often in our coming lectures. So are we clear about the spot market and spot rate? Whatever the rate right now at the time of transaction is called spot rate, which is the actual rate in the market. Right, everyone?
Yeah.
Good.
Yes.
Good. Okay, similarly, the US dollar is commonly accepted medium of exchange in the spot market. So remember, this book is US centric. So automatically assume that when you are reading the reading material, assume that you are in US. It will be more easy for you to understand the concept. So plus dollar, you know that the widely accepted medium of exchange any transaction is the dollar. So in spot market, everything revolves around dollar. Spot market time zones, the foreign exchange trading is conducted only during normal business days. So at any given time on a weekdays, somewhere around the world, bank is open and ready to accommodate foreign exchange requests. If right now here is night and in America it is the morning, so over there somebody is ready to have a transaction, so you can gather the dollars from there as well at a spot rate. No matter if you are in Venezuela, if you are in China, if you are whatsoever, there is a time difference as well, but somewhere in the world they are connected through platform. Somebody is opening the business, somebody is closing. But remember, during normal business hours, means not weekends. So foreign exchange market doesn't open on weekends, right? Like stock exchange market, they don't open on weekends. Now, spot market liquidity. So what do we mean by liquidity here? Anyone? What is liquidity?
investment?
Cash.
Not just cash. Half correct. It is ability to convert into cash. How quickly a currency can be converted into cash. We call this liquidity. So remember, spot market, when everybody is here, they are dealing immediate on the basis of immediate, hurry or something. So they have more liquidity, right? Liquidity means if you have dollars, if you have yuan, if you have euro, if you have pounds, you just present it, receive your local currency and go. So it means spot market, when there are more buyers and more sellers, it means the ability to convert into cash chances are more higher. So it means spot market liquidity is higher with the presence of more buyers and more sellers. So now we are start thinking in terms of international finance terminologies: spot market, spot rate, spot market liquidity, right? So in a sense, it is just nothing, it's just a fancy words, but remember that one, we are, every book has, or every subject has its own jargons, its own terminologies, right? So now think in terms of international finance. Spot market, what do we mean by spot market? Okay, you want to buy something right now. If you say spot, what is the spot rate? What does it mean? It means right now you want to have transaction right now. You have the cash, a foreign cash, you will present the cash and you will receive the money, right? So if the other person say that, okay, I have future rate, it means he's not ready to have a transaction right now. He wants to have a transaction in future, not right now, but he's just here for confirmation or having a contract, that's it. But money will be transferred in future. But spot means at the spot right now. Now the next one is attributes of banks that provide foreign exchange. So like I said, nowadays the expansion of banking services is becoming huge. Previously, more than 30 to 40 years ago, every finance function has a different companies or different you can say that agencies there. For example, those who are providing loans, they are different companies. Those who are providing retail services, they are different companies. Those who are providing foreign exchange, they are different companies. But nowadays, a bank has becoming more multitasking platform in which you can deposit the cash, you can take loans, you can change with your different currencies, you can invest in your stock market through bank account, you can go and buy grocery with your bank card. So everything is now becoming more, you can say that under one roof, you can say that one bank, many services are available here. But previously, every service has its own location, its own institution as well. But now everything is now consolidated. So banks do provide and do have a role in foreign exchange market. Number one, remember that one, competitiveness of a quote. So remember, it's a huge competitive market. If you gain 1 cent on a transaction of 1 million, remember 1 million and you gain 1 cent, you are earning $10,000 on just one transaction. So how many transactions are going on during a day? Millions, like billions of dollars transactions are going on. If you just earn 1 cent on every transaction, on every unit of transaction, so remember that one, you are earning crazy amount. So that's why you say that, I open my account with the bank, they are providing me services, they are providing me ATM and all the stuff, but I'm not paying any services, I'm not even